Good day, one and all. This is Dr. Sivaraman of iknowindustries.com. Hope you are able to hear me. Good day, Sandra. Thank you for confirming the sound. Let me display the PowerPoint presentation. Asian session live market analysis on September 28th between 5 and 5:30 GMT. Let us track the market using the live market code page. I go in the link for the same. Let me now focus the camera over that of the live market code page. Currently, Euro is trading around 1.307173. The low is 1.3036. The high is 1.3082. And positive net change of 22 pips is seen. And in the case of GBP, it is trading around 1.5669, 1.5673. 1.5612 is the low, 1.5684 is the high. It has gained about 39 pips from that of Friday close. Then in the case of yen, it is making subdued moves. 85.67, 85.70 are the current levels. 85.65 is the low, 85.80 is the high. 17 pips negative net change is seen. So here you come across USD weakening move. Euro and GBP showing positive net change, and USD yen is showing negative net change as USD weakening move. But in the case of Swiss franc, 1.0116, 1.0119 are the current levels. 1.0081 is the low, 1.0118 is the high. It has gained about 19 pips. So when Euro and GBP has shown the USD weakening move, USD CHF is showing USD strengthening move. So USD is strengthening against the Swiss franc. So that is what you come across. It is also showing positive net change. Normally when Euro is showing positive net change, CHF is the one to show the negative net change, to move in tandem with that of the USD weakening move. Whereas here you come across the USD strengthening move. And in the case of Canadian dollar, 1.0319, 1.0323 are the current levels, 1.0310 is the low, 1.0346 is the high. 9 pips negative net change is shown, which is again the USD weakening move. And in the case of Australian dollar, it has gained about 78 pips during the Australian session itself. Currently trading around 0.9438, 0.9441. The low is 0.9360, the high is 0.9440. About 78 pips positive net change is seen. So a little bit of a contrarian move shown between Euro and CHF. Because of that, Euro CHF has gone up by 45 pips. So roughly about 22 plus 18. So it shows Euro CHF, it shows about 45 pips positive net change. So it is currently trading around 1.3223, 1.3226. And it was formed the low initially 1.3167 and gained the levels and currently trading near that as a high. And in the case of Euro and GBP, Euro is showing 22 pips positive net change and GBP is showing 38 pips positive net change, higher than that of Euro positive net change. So as a result, Euro GBP has just made a nominal dip of about 6 pips, currently trading around 0.8340, 0.8343. The high is 0.8354, the low is 0.8334. So you find about 20 pips swing is seen in the case of Euro GBP. It is also expected to lose gradually, and Euro CHF is expected to gain gradually during the day. And as you find that Euro and GBP are showing USD weakening move, and also USD yen is showing USD weakening move, because of that you find that yen crosses have not made any significant gain, and Euro yen is showing about 0.02 negative net change, just a nominal dip, and GBP yen is showing only 4 pips positive net change. So you find that they are trading near that of the low currently, and the spread between the low and the high is also very limited in the case of yen crosses, because Euro and GBP and as well as USD are moving in tandem, showing the USD weakening move. So you come across less impact in the case of the yen cross. So that is what currently you come across in the market. Australian dollar is the one which has gained significantly during the Asian session. So let us see how exactly the market is expected to behave during that of the day. Let me focus the camera over that of the PowerPoint presentation. So the expected market moves for today. During the Japanese session, swing and firm up moves are expected. So already Australian dollar has firmed up and Euro and GBP are also expected to firm up towards close of the Japanese session. Then European session could show a very quick rise in the case of Euro and GBP during the early session. And from there could be a slide towards close of the European session. And then US session, you could come across a small swing in the middle level and then further rise during the day. So you could come across less drop and more rise moves today. So accordingly, one can take trading decisions. So whenever they make a quick drop, you can make a buy. And especially during the mid sessions, you could come across, in order to handle the crosses, they could make some contrarian moves. And as you come across Euro and the CHF making contrarian moves, they could just make the opposite of this particular contrarian move. During that time, one can buy USD CHF as well as USD, Euro USD. And in the case of GBP, more gains are expected during the day. So dips are very good buy opportunities. Now with regard to the initial lows and the highs, Euro has formed the low of 1.3036, which is not affected, and the high is also not breached. So they are making a range bound swing from that of 3:30 GMT till now 5 GMT. So they are expected to make a brief upward stop and make a brief downward stop also during the day. Whenever they show a downward stop, you try to buy. And in the case of GBP, 1.5612 is the low, and the high is 1.5684, which is also intact. So if they are not breached, the high or the low during the Japanese session, then you have to understand that they wanted to make a downward stop and before making a rise. So that way, during the gap time or anywhere, they could make around 6 GMT also, they could make a quick downward move and then a rise. Then in the case of USD CHF, they already done the downward stop at 1.0081 and they are expected to make the upward stop or gain above that. 1.0112 was the initial high, and they have cut the high and formed a new high of 118. About 6 pips they have gained the level and they are hovering around that particular high. So the downward stop is over in the case of CHF, and they could gain quickly the levels in the case of CHF and then make a little bit of slide in the case of Euro in order to induce the higher level long holders to liquidate the long position before making further rise. And also in the case of GBP, you know that they, in order to create quick variation in the sentiments of the market, they make use of GBP. So there could be a quick move on the downside as well as on the upside in the case of GBP. Be prepared that they will be doing the downward as well as the upward stop and alternatively, because they have to gain the levels and quickly book profit of their long positions what they have accumulated, and then subsequently hit the stops of the long holders who have taken the buy at the longer side on Friday and above 1.31 in the case of Euro and above 1.57 in the case of GBP. And after hitting the stops, they are expected to gain the levels with the least selling pressure. And in the case of USD yen, 85.65 is the low, which is intact. 85.80 is also, the high is also intact. So they are making a nominal swing, and they could make a downward stop as well as the upward stop. But still, the sideways moves could continue, because after the intervention story, not many people are trying to take the buy positions, and they want that market to consolidate and show a drop in order to enter, but the market is not showing the drop. And because of less volume, they are not gaining the levels also in the case of USD yen. And Australian dollar 93.60 was the low which is intact, and 94.38 was the high, initial high that was breached, and they formed a new high 94.45. So you can understand that, and currently trading around 94.38.41. And once the ask comes below that of 94.38 and stay there for some time, then you can understand they could make a downward stop, and they made a brief upward stop, and they could make a downward drop and quickly and rise it again. So keep it in mind that just because they have cut the high, it is not that they are going to gain the levels quickly from there. And they cut the high and they come closer to that of the initial high, and when the ask comes to 94.38, that means they have made a brief upward stop, and as you know that if they had done it only for 30 minutes, that means it is an upward stop, not an extended move. Then you have to identify that they could drop further to the psychological level 94, or try to hit the stops below that of 94 and then try to gain the levels. Then in the case of Canadian dollar, 1.0310 is low and currently trading around 1.031721, and 1.0346 the high, which is also intact and not breached. So you find that they are not breached the highs or the lows, excepting Swiss franc, they breached the high, and also in the case of Australian dollar. So they are all sporadic upward stops, and they are expected to make the swings in this and try to make a downward stop or come closer to that as a false move and then gain back the levels during the day. So keep that in mind that not near the high we can buy. We can only buy when they are dropping it closer to the low. And when they have cut the high and stay above there for more than 30 minutes only, we can do a technical buy of above the high. So this you have to keep it in mind. And if you observe the type of moves, you will be able to differentiate whether it was a stop point above that of the high in the case of Australian dollar, or it is a genuine extended upward move for 2 hours. So if you could understand that, then it will be easy for you to take trading decision. And ultimately, you should be able to identify the type of moves in order to enter exactly in the market around the appropriate levels, and also you will be able to envisage or read whether they are going to rise after your buy or they are going to drop it after your buy. So if they drop after your buy, that means you have done an emotional buying. If they gain, then probably you have done the right decision. Similarly, after your sell, if they rise the market, that means you have emotionally sold it during the drop. So avoid such things, such emotional trades, and wisely watch the market for more time and take very less time to take position and exit out of the positions without being hurt badly. So let me minimize the PowerPoint presentation and focus the camera over the line of the code page and take up the questions which are asked here. Now, before the start of the webinar itself, Francisco has asked a question. Gold is close to historical high. Can we expect those highs to be breached and steady, trading above that level, or a drop is still expected? See, whenever they come to the historical level, you understand they are history. No? And once in a while only such levels will be shown, and they will not be consistently showing it for a long time. And they could make a quick upward stop, and because historical level, whenever it is shown, not many people, those who are walking across the road, they will also think that why not I take a sell position without even understanding what is going on in the market, and such traders will be induced to do the short covering. Then afterwards, the market is expected to drop. So it is weak beginning. So Obviously, on Friday, many of the traders would have done the short covering. Those who had taken the shots, they would not have carried forward to the next week. And fresh selling will come. The players also know about it. And obviously, the highest level, nobody will be interested to buy. Then the players do the upward stop and for such short sellers and discourage them to do the short selling and then try to drop. And after the drop of about $5-10, then people will think that it is better to buy because it could go to 1,300. Then get struck. Then Peter, how long till we then drop? A false move is expected to. See, false move is part of the game, you know very well, and they are expected to do the false move either during the gap time. That is one of the inevitable moves they do during the gap time. And before any further rise, they normally do the false move. So that's the move. You should be able to identify a quick downward move, and within 30 minutes they could come up and breach the high and go above. And that will show the real strength. No, when they make the false move and then gain, then you will find the gain will be very significant. Without a false move, they try to gain it and they may not gain in a very big way. Yeah, I'll show the slide again. Then donkey. Or the daily high and the low based on the everyday ending at 00 GMT. No, the daily initial highs and the lows are being taken for record in our understanding around 3:30 GMT. And would not be the high and the low differ based on everyone's broker? No, there is a difference when you try to take it from the broker, and you know who is providing the feed for the broker is more important. And ultimately, you come across most of the trades are being traded at interbank treasury and they are being reported there. And some of the trades which are executed and later on they are being reported. But interbank treasury take into consideration the trades which are reported live, and based on that they try to give the highs and the lows. So we should go with that. On the high and low differ from broker. Either ECN or not. I use ECN and feel the daily Euro USD. I got 1.3017 and 1.3158 for Friday low and the high. So as far as the individual ECNs are concerned, and you know they are the market makers, and so obviously you'll come across many of the platforms. They will try to fill some more orders above that of the high or below that of the low, telling that the spread, because of the spread, such orders are being triggered. And in such platforms, you try to keep the around that of the low, you keep a buy order. Around that of the sell high, you keep a sell order. They may not fill it. Whereas if you keep a buy order above that of the high, or you keep a sell order below that of the high as a stop, they will fill it. Then you can understand that such things are locally made and not with regard to the market. Peter, do you see GBP-CHF upward continuation? See, if you take into consideration GBP is making an upward move and it is showing about 32 pips positive net change, and CHF is showing about 15 pips positive net change. So it is likely to go up. GBP-CHF is likely to go up. Before that, they could make a brief downward move and then go up. So at that time, you can take entry. Then okay. So as far as Euro and GBP are concerned, I have shown it in the forecast page that they are expected to gain levels today. Then what time did they drop to 56.12 for initial low? I don't see it. So Rob, I'm not telling that they will come to 56.12 all the way to low. or little lower than that, there is a potency for it. So during such time, if they make it, then try to buy. That's what I suggested. So I am not telling you definitely they will make a drop below that. There is a potency for them to make a downward stop and then go up because they are not breached the highs and the lows. So please differentiate between that of the potency and the definite move. Then you get struck. Do you expect the lows to be broken in Euro and GBP? Yeah, that is what true. There is a great potency because they are not breached the highs in the case when Australian dollar has breached the high. So they are not breached the high in the case of Euro and GBP. So there is a great potency for Euro and GBP to make a downward stop and below that of the low before making further rise. So it is only a potency. So they may or may not do that. Anurag. Can we still expect N crosses to rise last after CHF cross? As far as N crosses are concerned, Euro and GBP are showing positive net change and N is showing negative net change. So as a result, you will find that they are making subdued move, Euro Yen and GBP Yen. The other N crosses, obviously Australian dollar Yen and things like that. There you could come across some good moves. Now, Kate, what is the direction for Euro this week? Drop first and rise. So today they are expected to gain the levels, and tomorrow you could come across some sideways move with some more gains. And midweek I'm expecting a quick downward stop, and you know that Tuesday there's going to be the FOMC meeting minutes and by 18:15 GMT. So after that they may gain the levels in the case of Euro and GBP. Then on Wednesday they are expected to make a quick downward move as a surprise to that of the traders and then gain back the levels. So keep in mind Wednesday the market is expected to be very, very volatile, and after the FOMC meeting on Tuesday. So after the meeting they are expected to gain the levels, but afterwards the traders will think that it is going to be a risk appetite move and then try to jump into that market, and probably the players have to just show them the other way and just hit their stops and before making further rise from that of Thursday. So volatility is part of the market. Keep it always in mind. They cannot make one-sided rise in the case of Euro and GBP because of the varied positions of the traders. The traders do buy and sell as well as sell and buy trade. So the players have to necessarily see that they are able to earn from them, and they don't give the profit so easily to that of the traders. Then Lily, what is the projection for Euro? See, Euro is expected to breach above that of the recent high 1.33 and GBP around 1.5750 area and probably 1.60 area soon in this particular week. Do you see Euro CAD going below 1. We are talking about Euro CAD. USD CAD. USD CAD is currently trading around 1.0318 and you have mentioned 1.2850. I don't understand. Harry, do you consider fundamentals as well as your trading decisions? I do consider fundamentals as well as technical, but on the limited side. So, because the fundamentals have to be used to drive the market to a certain extent, but only thing is the interpretation given for the fundamentals vary from time to time. So you know that the Greece crisis was being highlighted in a very big way, even though it was a crisis. They made the initial drop and subsequently made the rise, and nobody is talking about Euro then Greece crisis now. Do you think the problem is solved? Similarly, they have talked about the double recession in the case of Euro. I mean, in the case of US, and Many thought that there will be a risk aversion moves, but they are made against it. So, see, fundamental is nothing but the perception. A relative comparison compared to that of the previous levels or previous month or previous week or previous year, etc. But the conditions do not remain the same. They are similar conditions, but they are not the same conditions. And you know pretty well, a simple example I can give you, whatever the essential commodity you buy today, you just compare it with that of the yesteryears. Obviously, they will look very expensive. But when you compare your revenue with that of the yesteryear revenue, then you will find that, yeah, it is justifiable. So, it is a question of a relative comparison, which one you are trying to compare. So, obviously, there will be a variations with regard to the perceptions from time to time, and different analysts might do different type of perceptions. And also, you come across sometimes some people might be proactive and then try to give extraordinary projections, etc. And it may work or it may not work. And so, what I basically feel is we have to trade current levels rather than thinking about the past or thinking about the future. Currently, are you in a position to survive in a trade? Are we in a position to successfully trade and earn money from that other market? So this sort of insight and this sort of mindset, I find that we'll be able to really take up the market in a very sportive way and try to earn from that other market. Thinking about the past and thinking about the future can only trigger the fear. Because past we are experienced, future we are not experienced, and the past experience would trigger our fear, and we will emotionally look into the future, and we won't be knowing whether we will be holding a position for the future or not. And in such an uncertain situation, try to trade in the current level, and try to aim only for a swing trade. When the going is good, keep stop at entry, and then try to take advantage of the future. Rather than simply talking about the future is of no use. Because when the governments are not bothered about their future currency levels, so obviously we are not the right person to do that. Then DTPD. Do you see Australian dollar going above 95 and below 93.50 today during this talk? See, Australian dollar gained about 77 pips. You can see that. So whenever they gain above 75 pips and sustain there for one session and more, then they can probably make a brief dip, but they may not make a downward stop. So that I already explained it in my trading system webinars. And when they are within 75 pips, and then there is a possibility for reverse. But once they gain above that of 75 pips and sustain there, that means they are absorbing all the selling. So whoever is selling, they are trying to absorb it. They may make a small dip, come to 94 area or 93.10 and things like that. But we have to really see how exactly they are going to do it. And another important aspect is it can also move in tandem with that of the other markets like Euro and GBP. When they drop quickly, then Australian dollar also could come across in tandem some drop. But how exactly they are going to handle it depends upon the traders who have taken the sell positions and buy positions. So ultimately, if the traders are trapped with a lower level short selling around 93.60, 93.70, they may not come down to that, and they will necessarily force them to do the short covering. And if the players are predominantly bought around that level, then they will see that they are booking profit by holding high. So that is what you come across in the case of gold. So gold, they have been rising slowly and the traders were selling. And they are not dropping it just like that. They hold around the same level, making circular trades. So obviously the traders losing patience have to do the short covering. So wherever you come across thin volume, then the holding period will be prolonged. Then Peter, out of the non-risky currency, Yen, CHF, USD, which one do you favor at the moment? I don't think any currency is non-risky. Any currency for that matter, you come across the risk involved in that because the market is bound to make the volatility. And the volatility is part of the market. Without volatility, it is not a market at all. And it will be a normal transaction. So if you go to the bank, if you try to convert your US dollar into CHF or CHF into US dollar, you come across not much of an volatility there. And during the day, and probably if you try to do it within 5 minutes, they will try to do the same rates. Whereas in the market, you don't come across the same rates for a prolonged period, and invariably you come across quick drop and quick rise, etc. So, no currency is a safe currency because you're going for a leverage trading. So, if you are doing the actual currency conversion trade, then I can say that you should convert now CHF into US dollar and yen into US dollar. If you hold yen, then you convert into US dollar. And if you hold Canadian dollar, convert into US dollar or any other majors. So that way we can do it as a currency conversion trade, but not taking leverage trading. Leverage trading, once you take the position, you have to close the position in the market. Then this is the question. Okay, bro. So this week we expect a big rise. I am not telling big, I am expecting a rise. So rise about 200 to 250 pips. If you call it big, then fine. Because normally they have got a potential to rise about 150 pips in a day. Then after midweek, to gain the levels you mentioned, is that right? Yes. So midweek they are expected to make a very quick volatile move and then subsequently gain the levels on Thursday and Friday. And Friday you could come across volatile moves again, but more gains will be seen. So afterwards we will find that FOMC rate decision could be discounted and more gains could be seen from Thursday. Let us review the analysis. This is the overall analysis based on the algorithm, but volume variations can bring in changes in the market. And sometimes if there is a low volume, there is no point in gaining the levels or losing levels. So the players will also get struck and they will expect the traders to commit positions before making further gains or drop. So that also we have to take into consideration. That is going to be a live condition. So when exactly the traders are going to enter into the market, we won't be knowing. Nobody will be able to predict. And so obviously we have to take into consideration and fine tune. For that matter only, I am trying to use market reading in order to fine tune my forecast. Then DTPT. Okay. Lily, what is the projection for USD CAD? USD CAD is expected to make less drop and more rise moves this week. For USD CHF, do you expect it to more rise than dip and go above last week? There is a great potential in the case of USD CHF, and they have been doing it below parity for briefly for only towards the weekend. So that shows that they want the long holders to liquidate, and now people are afraid to take long position. And if they try to take long position also, it will be at the lowest level. So even if CHF drops about 200 pips, they may not be worrying it, and unless and otherwise they are position traders. So then there is a great potential for USD CHF to go up. Then grow. Do we look, as I explained, that during the rise of Euro and GBP in this particular month, we will come across a contrarian move of gaining the levels in the case of yen, CHF and Canadian dollar. But it all depends upon the volume, the gains in the case of denominator currencies. But numerator currencies are expected to gain, and commodity pairs, they are expected to lead the rally and lag behind. These are all the major concepts with regard to market during the rise or during the drop. Then grow. Do we look for the last week initial lows for the possible stop? No, they may not. Then Drupal. Should we expect false move on the big beginning in GBP so that they may drop below low of the day to induce more selling? What do you think about this? Now, as we come across that they are holding at the middle level currently, they are not breached the high in the case of Euro and GBP. So how exactly they are going to do it, we have to watch. So because early European session, they are expected to rise. So during the gap time, they could make a drop. Or around 6 GMT, during the late European session, late Japanese session, they could make a quick drop and then gain back the levels towards close. So how far they are going to come down, let us watch and determine. And you know that any intermediary level, if they are not breached or gone below that for more than 30 minutes, that becomes the intermediary low for them to rise again. So we may see it only in the live code here. Say, for example, euro comes to about 1.3045 and then go up. Afterwards, again come to 1.3045 and go up. That means that is the intermediary support they are trying to establish, and they are not trying to do the downward stop it. So if they just come closer to that, then be sure that they are expected to make a downward stop. 1.3036 ask becomes 1.3036. Then they wanted to make a downward stop, and definitely. Then drop. You mentioned me, how did you calculate 1.5612 initial low today? See, if you see in the live market code page, you come across 1.5612 as the low. That I am taking into consideration as a low set, and it is being set by interbank treasury. So don't try to find out the logistics behind all, because if you expect the market to move in tandem with that of the logistics, then there won't be any surprise, because all have got sense to understand the logistics derivations. Okay, so they have to make illogical moves, only then they can trap the traders. So that illogical, how they do it? They suddenly, after the release of a data, they make a different type of interpretations and try to make the moves in the market. So at that time, they say that the technical will not work. It is the time for fundamentals to work. Then subsequently, they will say, no, now technical has taken over the market and technical is showing how exactly the market has to move. So this is how they alternate. And you won't be knowing logically whether they are going to use in next 30 minutes fundamentals or technicals. So understand that market does not have all logistics, and it can make illogical moves, and such illogical moves are nothing but surprises for the traders. So in the case of the denominator currency, for example, CHF came below that of parity. Is there any logistics behind it? And do you come across any other data which shows that really CHF has to be strong? And simply they said the safe haven currency. So a lot of people have taken the positions. And what happened to that? And there was a logistics on last week before the BOJ intervention that China is buying yen. And everybody was confirming that China is buying yen, but they did not mention when exactly they exited. And afterwards the intervention came. And then there was a gain of nearly about 200 to 250 pips. We mean to say China is doing an emotional trade. So you have to understand that. So it will be illogical later on. So it might appear that because of China, and probably China is the market player, that is what many people have derived. But wrong. No government will act as a player in the market. They can only protect their currency to a certain extent. And they will not, and that too a developing country cannot be a player in the market. And the market is controlled by developed countries. And you know the difference between developing and developed countries, and there is a huge difference, financial strength difference. So obviously a developing country cannot control the currency of a developed country. Can a the boxer can be competed with an ordinary person? It is something like that. Then you say about crude, Anurag. So crude is making a swing around 72 to 77, 78, and it is expected to maintain this particular range, DDPD. So it would be wise to close our long positions in Australian dollar, euro, and GBP during the Japanese session. No, I said that during the early European session, they are expected to quickly gain the level, and during that you can do it. And if it is an intraday trade, try to book profit and then try to take at a lower level a buy position. If it is a long-term position trade, keep stop at entry. Suppose you have got a buy at 1.2917 in the case of euro, there's no need to do participate in the swings. You can simply keep stop at entry in that and hold it for a long time, because many traders have got the tendency to hold a loss-making position, but they don't have the patience to hold a profit-making position. If you want to really maximize the profit, try to hold a profit-making position for a long time, and that going is good. Try to inculcate that particular habit also. Is there a free source for the lows and the highs online? So it is available in the live market code page, which is free for anybody to view, and there is no need to open a trading platform. You can just see in the live market code page, which is provided by Saxo Bank, which is coming from the interbank treasury, and that is why I prefer it. Otherwise, no affinity with any broker. So you can use it for your reference, and there the initial highs and the lows are being fixed, so that all can see the same page. That's what happening for a long time. I've been giving these webinars for more than 2 years, and all the traders are using this particular code page, and whenever they are referring to me in the blog, etc. And see that. CAD is showing negative net change, whereas Australia is showing positive net change. What does one make? So both are doing the USD weakening move, isn't it? So in USD, CAD is showing negative net change. It is showing a drop. That means Canadian dollar is strengthening against US dollar, and AUD USD, Australian dollar, is the numerator currency. So obviously when it is rising, then Australian dollar is becoming stronger. So when a numerator currency rises, that shows that it is stronger. See, like Australian dollar, US dollar, and shows positive net change, that means it is strengthening. Euro and USD is strengthening, and GBP USD, it is strengthening. That means GBP is strengthening, numerator currency. Here, for example, USD yen is a denominator currency. Whenever there is a drop, it is strengthening. Then USD CHF, it is showing positive net change. That means CHF is weakening. So this is the basic you have to understand, sir, in order to trade in the market. Can I explain that 75 net change idea? Probably please go through that my trading system webinar. I have given it, sir. I explained it there. Probably tomorrow I'll do it, because it is already time, exceeded the time. Is it wise to add on to our profit position? You can do such trades provided you are able to keep stop at entry. So only one position you are taking a risk. Euro and GBP during the last session, during the late European session, when they dipped, you can buy during that small dip. They could show during the European session. So let me display the expected market moves. Swing and Firm up moves are expected during that of Japanese session. So they are holding high and they could firm up further. Probably there could be some correction. They could make around 6 GMT. Watch it into it. And then European session, a quick rise is expected, and then later part of European session there could be a slide, and that could give a buy opportunity. So quick rise is sell and buy back again during the drop. Then swing and rise moves are expected during the session. So ultimately, the market is expected to gain today. So try to decide your trading decisions accordingly. So initial highs and the lows, I have taken it. Only in the case of Swiss franc, they cut the high from that of the initial high they have set, and that is USD CHF, and also in Australian dollar they cut the high, and subsequently they are still holding around that particular level, 94.38. The other currencies, they have not breached the level. Okay, so I take this opportunity to thank everybody who have come here to listen to my talk, and we will meet again tomorrow and discuss more about the market and also about the trading strategy if needed. Thank you one and all. See you.